It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
And it's your Real Estate Breakfast back for the weekend, breaking down for you the Aussie property market. Got another busy Saturday morning property show coming up with Australia's independent voice on all things real estate. And it's been a worry where we go with this Iran war. Where is it heading? Trump has gone down a path that even if he wanted to retreat from it, the damage has been done and probably more damage to come. Now, if you're joining us for the very first time, a warm welcome to you. Great to have you with us. And if you enjoy the show, please leave us a review on Spotify or Apple Podcasts. It helps more listeners discover us, and also you might as well make sure that you are subscribed. Very shortly, we're going to have Dana Lewis and Mario Volpi. You know who Mario is. And we're going to be talking to both of them about the latest conditions from the UAE property market. So many Aussie investors in this market. They are both based in Dubai.
It's the Saturday morning property market update. Join us for a deep dive into the world of real estate.
Yes, Dana Lewis and Mario Volpi are once again with me. Let's come to you, Dana.
The sampling of opinion is extreme on both sides. And there's lots in the middle. So there are people who believe long-term in the market. We're in a short-term problem. It is situational. It's not structural. They believe in the next 2 and 3 and 4 years that the property has long legs and will pull out of, if you want to call it a crisis, some people won't call it a crisis. I think it is. It will pull out of the crisis and then bloom like never before if there's a peace deal with Iran. And there are other people think that, there are end of days people who believe that this is never going to recover. And there are people who are selling into this market. The real estate agents who sell off plan, they are always going to be critical of us because they're going to say that we should be boosting the market and talking the market up. And there are people who feel exposed in the current market, who feel misled somewhat because they bought off plans and the off plans have gone down in value and now they want to get out of them and they can't, and they've got to make their payments contractually. So there's a really wide range of opinion. But you return, if you allow me just a slightly longer answer, return to the fundamentals of the market and say security. So that's a big question mark. But taxes, no taxes, no capital gains, a bridge between Africa and Asia, Dubai, the United Arab Emirates, Abu Dhabi remain very attractive to very many people. So I believe I'm bullish in the market once we get over the crisis.
Mario, let me come to you because I know that you have got thoughts around this.
Yeah, good morning, Craig. Good morning, Dana. From my perspective, I always try to be measured. I do err on the side of optimism. I used to be called Dr. Boom on a previous radio station because I was always effectively talking the market up. But I come from a place of experience. I've been in Dubai for 18 years, and in that time, I've seen situations where Dubai has come out of it in a much stronger position. I know this time is slightly different. We're more involved as opposed to being a sort of a safe haven where people come to us from conflict. However, I really, really believe that the fundamentals, as Dana says, are all in place. We're in a much better place today to actually get over this. And as long as it actually finishes sooner rather than later, it remains to be seen exactly how it finishes and what's left behind. By that, I mean perhaps regime change or more of the same, just not shooting at each other, will then determine exactly how we recover. But recover we will. And actually, I will say to any investors who are sitting on the fence, yes, maybe you're not as risk averse as others. However, this window of opportunity to buy where developers are giving very good payment plans, where developers are offering benefits like DLD waivers or guaranteed ROIs, which they've never done before, or certainly not as many as they have done now, will actually potentially remove those and prices will actually go up. I believe that off-plan prices will go up because construction costs will increase. Aluminium, steel, glass, any of these components to build these towers, make that decision. Now is a great time to jump in. So if anything, I'm very positive, as I always am.
Yes, always very, very positive, Mario Volpi. Now, where is your position? Don't forget to keep those emails coming through. Are you an investor? Are you on the side of some of those emails that have come in? Or are you on the side of Eric saying, hey, my plans to move to Dubai indefinitely are on hold? We would love to hear from you. And don't forget the recorder. You can record your voice and we will replay that in the next episode. Now, let me stay with you, Mario, because Dubai has removed the minimum property value requirements for investor visas, opening the market to a much broader buyer pool. Now, this could fundamentally reshape entry-level demand and pricing dynamics in affordable segments, especially from first-time international investors. Now, does the policy change create new demand? Will it be a real new demand or just a shift in existing demand down the price ladder? What do you think?
For me, this is a really big deal. It's a very positive one because previously you needed a property worth at least $750,000 to qualify for this 2-year investor visa. Now, that's if you're a sole owner. There's no minimum value at all. They've removed that. So as long as the property is registered in your name, you can go ahead, buy any property, and you will be able to get a 2-year renewable investor visa. That significantly lowers the barrier to entry, and it definitely opens the market to more buyers, especially in the sort of entry and mid-level segments. At the same time, there is actually more structure around joint ownership. Each investor now needs a minimum stake of around $400,000 to qualify. So if you're buying, with a spouse or in another name, then the value does have to be $800 to qualify. You can't split ownership into very small shares just to access residency because of those meaningful exposures. So it's definitely a balanced move. There's more accessibility for individual buyers, but definitely discipline for the joint investments. But I think the bigger picture here is the demand. Because by removing that entry level, Dubai is likely to attract a much broader pool of investors and definitely boost transaction volumes and support more sustainable growth, as I said, particularly in the lower to the mid-market segments.
What about you, Dana, with regard to the investor visa rule change? Have you had inquiries, people saying, yeah, this is of interest to me?
I'm getting some inquiries about they tend to be the longer visas, the golden visa, the 10-year, where you don't need that 2 million minimum, I believe, anymore. You just need to commit yourself to a property that's 2 million or above. So yeah, there's definitely, always that segment that is interested in the visa, but the discussion always needs to come back to what are you buying and where are you buying it? And what's that going to look like long term? And investors need to, along with all of these things that they're considering, from visa to tax regime, they need to consider quality of the developer, and they need to really look at location, whether that be in Dubai or Abu Dhabi.
Now, here's a really interesting question, and I'm going to put it to both of you. If you've got a portfolio of 5 off-plan still being built and 5 secondary market properties in this market with what is happening, and you're looking at that and saying, what should I do as an investor in this moment? Do I sell part and parcel of both of those asset classes? Where do you move? Especially if you've got to move, if you've got to sell something off. So let me come to you first, Dana, and get your thoughts.
How far are you along on the off plan? Because that really matters. Because if you're just initially, 10, 20, 30% into the off plan, I would say you got to stick with it, and you've got to make your payments, and you've got to get closer to handover. And that's where the real value will be. The secondary properties, again, it depends on where they are and who the developer was. Are they close to the water? Are they on the waterfront? And they have long-term value in them. So I wouldn't start flushing anything. And where are you financially? How do you feel about risk and de-risking some of it, maybe in the secondary portfolio? And how are you on carrying your off plans? Were you counting on rentals after you have handover? Were you counting on mortgages to carry some of those once they're handed over to you? It's really a longer conversation, and it's never an easy one with investors. And it really depends on their individual circumstances about their income, about their appetite for risk, and what their long-term goals were in the first place. Was it simply to flip these over and make a lot of money, and now maybe they're not going to be reaching those horizons, or was it a belief to hold them longer in the market? And they need a strategy. I mean, these are assets. They should be performing assets. It's just another financial class. So if it's not working for you, you have to look at where else your money can be. And portfolio should be balanced, and property is just part of it.
Okay, Mario, let me just tighten up on this. So the portfolio of 5 off-plan properties, they are 80% built. You cannot service everything at the moment. You've got to sell something off. Okay, let's get a slightly different answer perhaps from you, Mario, on this one.
But what I would definitely say to any investor is that they would have to review everything. And actually, I wouldn't rush to sell everything or indeed anything. So it has to be measured. If required, I would probably look at staggering sales, but on the secondary units where the prices have already moved. On the off-plan side, then it's about, when the investment was made, as Dana says. You've just now told me that they're 80% done, so great. There's only 20% to go, which means that the best value for the investor will be on handover anyway. We would need to understand the quality of the developer and obviously the delivery timelines if there are any delays. Depending on the actual developer, some of the larger, more established ones will actually continue to build without any issues because a lot of them are liquid. But if the developer is smaller or not basically Dubai-based, maybe, the investor will have to look at potentially price reductions in order to attract a new buyer. But if the investor did buy a while ago, then the chances are there has been some capital appreciation, so they'll be able to sell at a reduced rate, but still make money from the original price, potentially.
Now, if you're in that situation where you do have to sell off some property, part of your portfolio, I know that you might feel a little sort of gun shy in getting in contact. You can do it anonymously. Just give us your situation, make it anonymous, and we will let everybody else know. Mario, have yourself a great weekend.
Thank you, Craig, and I wish everybody a peaceful weekend.
And you too, Dana. Have yourself a great weekend coming up.
I always look forward to talking to you. Thank you so much, Craig.
Get insider tips from industry professionals and level up your real estate game by unlocking the secrets of successful real estate transactions.
Most people don't realise that whacking a granny flat in the backyard to get yourself a little bit more rent then turns your property into an investment property. There goes your home insurance. So a quick cash grab for some extra money to pay your mortgage off could land you in a lot of hot water.
Yeah, because underquoting, we know that this is a major problem. We've spoken about one individual losing his licence for 10 years. You're seeing that in your market?
Yes, definitely. It's one of those fine line things that sales agents use in their tactical box to drag in more clients. If they put the price up, people might get scared away. They tend to drop that price down a little bit, drag people in. Hopefully they'll get emotional and then they'll, find the money and raise to where it actually should be.
We connect you to the best real estate information across Australia. The Real Estate Podcast.